What on earth has happened with soy? The total value locked, the capital that's on the chain has dropped massively from 3 billion to 1 billion. And that's even more surprising given that the decentralized exchange trading volume over time tends to go up. Here is what happened. A deleveraging event. Measured in soy tokens, the total value locked actually did not go down that much. But the market cap of soy relative to the entire crypto space, it is on the decline. This is the soy dominance. You might know the Bitcoin dominance. This is the same thing for soy. It peaked at around 0.5% and is now at only 0.2%. There's two ways to interpret this chart. There is the overall bearish trend, but we are also relatively low on that trend, and maybe there's a short-term recovery of around 45%. So depending on the time horizon, maybe this is a buying opportunity. Let's have a look at some data most people are not considering, because this is just the dominance values at the end of day. Have a look at the same thing within the day. There is this massive wick here. This was on the 10th of October. Soy underperformed the average crypto asset by 66%. There was a shakeout within all of crypto, but soy got hammered much more. The reason for that volatility was, of course, the perpetual futures, right? The levered bets on the price. There wasn't that much liquidity in the spot market, but there were many people that were betting on altcoins with leverage. Now, there were more bets on soy compared to any other altcoin, and we still see more bets on soy compared to any other altcoin. So it's a $180 million liquidation of the longs on that 10th of October. The funding rate turned massively negative. We can also see how structurally the funding rate has changed. Since that long liquidation event, the average funding rate tends to be slightly lower compared to pre-10th of October. So it seems like some market makers that tended to skew towards the long side, they might have exited the market. Or overall, market participants tend to be in general more pessimistic now. Maybe the longs that lost everything on that day, they are not coming back. And the few shorts that made money on that day, they are still dominating a lot of the price discovery. Now, there are several ways to look at the situation. For example, in the past, when we saw open interest go down, right, the amounts of bets on the price, when that went down, we tended to see the spot market bleed afterwards as well. The same is true now, right? We see the crash on the 10th of October of open interest. Subsequently, we see how the spot market bleeds. The spot market price is the line in yellow. But then, once open interest stabilizes, there is a chance for a potential breakout. And maybe that's where we are right now, because open interest is indeed stabilizing. It's not going down anymore. That's the potential opportunity. By the way, if this is not your very first time watching this channel, then feel free to subscribe over here. I publish videos regularly, and when you're subscribed, YouTube is more likely to recommend the videos of this channel again. Now, the others market cap is on a quite constant downward trend since that 10th of October. And maybe we will go all the way down to the bottom of that wick of that price distortion, which means for the overall altcoin market, a 22% further decline. For soy, unfortunately, that's much more. For soy, that's 66% of potential decline. And again, the reason is all of that leverage in soy. Soy is the 8th largest asset in terms of its open interest, measured by CoinGlass. But in terms of market cap, it's only the 30th largest cryptocurrency. So still, soy gets so much speculation on the perpetual futures relative to its standing within crypto. Even after the open interest collapse, even after we saw this massive liquidation event. And so my impression is that soy really can only recover once the short-term trading comes back, when perpetual futures are getting used again, when the open interest in general in the market is expanding again. Then soy will benefit from this more than the average altcoin, because soy tends to be traded more on perps than on spot. Have a look at the capital that's on the largest decentralized finance perpetual futures exchange. That's Hyperliquid, the TVL. It peaked on the 10th of October and since then comes down. The question is, when will this turn around? When we look at the open interest on Hyperliquid, how many bets are currently made? And that's across all assets now. It was at 16 billion prior to October 10th. Then it crashed very quickly down to 7 billion. It recovered slightly, but now it's back down again at around 6 billion. Soy saw even more of an open interest destruction, at least relatively speaking. Before we see a real recovery of the perpetual futures market, before we see short-term trading with leverage coming back, I think SUI will continue to have a hard time. The problem really is that the potential downside is quite high. If SUI totally delevers, there's way more downside for that asset compared to other altcoins. And while the dominance chart short-term might look bullish, I always think that the overall macro trend is your friend. So I feel more comfortable waiting for a potential recovery of the dominance to then bet on falling prices over here. I don't want to have the macro trend against a particular bet. The macro trend for SUI, unfortunately, is still bearish because perpetual futures trading continues to go down and because SUI is just such a target for perpetual futures trading. It just has way more inherent leverage in its pricing than other altcoins. Now, I'm not talking about this too often on this channel, but I actually have a traditional finance background. So I've studied investment management and financial analysis in Hong Kong. And so I do think it's very important not to be just hyper-focused on crypto. It's very important to be diversified across different asset classes as well. Asset classes that aren't so much correlated with crypto. So even if crypto goes down, then we want to own assets that don't go down, that might even benefit during a crisis. The issue is that stocks are also historically very high. The price to earnings ratio of the S&P 500 is currently at 40. So that implies a real return of 2.5% per annum, less than the risk-free rate right now. This, by the way, this was the dot-com crisis and this was the global financial crisis. Bitcoin was created over here. The problem is that gold, relative to the money supply, is also quite high. It has only been higher at the end of the 1970s. And we are above the historical average. That's the dotted line. And so this is where this channel is different to other crypto channels. I try to look at the picture holistically. And if you want to dive deeper, I have made many tutorial videos on not just crypto, but on how to do proper risk management and how to do proper asset protection and how to diversify across asset classes and how to optimize long-term risk to reward. This here is a monthly chart of my net worth. And during that time, we did have two massive bear markets in crypto. But if we rebalance our portfolio properly, then we can still make constant outperformance. That's the whole idea. And so if you're in it for the long term, right? If you don't just want to make the moonshot bets that might or might not pay out, if you're actually into wealth building long term, then the premium membership might be for you. A link to premium pops up here on the screen. Looking very much forward to seeing you there as well. Thanks for watching and see you next time. Cheers.